let's just get into it. So Alex, important numbers, always the labor report is always an important one, right? What was a very short trading day on Thursday. Unemployment report comes out 8:30 a.m. Eastern time. And right off the bat, it looks bad for rates, right? It looks good. Let's say it looks good for the labor market. Comes in a little bit hot, kind of in line with where we've seen it the last few months, but you've read a little bit deeper into it, and there's some facts in there that I think are important.
On the face of it, as you noted just a moment ago, this labor report looked extremely strong when you look at the headline number, and it really decimated any chances when you look at the CME Fed Watch for rate cuts in July. 95% for a stay in July now, and 60% in September. So just creeping down on that side. But yeah, looking a little bit deeper beyond the headline number, it looked really strong. 146,000 new jobs, well above estimates. The unemployment rate, which was expected to tick up 0.1%, stayed where it was at 4.1%. So it looked really healthy. But the caveat there is private payrolls, which is really the driver of growth in the economy, was only 73,000 of that 140. And a big chunk of that remaining, the new public sector payrolls were in education space. And this is really a seasonality effect in effect here, because this is the time of the year that school teachers are being hired for next year. And I think it's great that we're hiring more teachers, get those teacher-student ratios down. But on the face of it, I think this is like a one-time standout month, because they're not going to be hiring more teachers next month or the month after. Definitely, I think that cushioned a lot of the market reaction. By the end of the day, we were pretty flat in the bond markets. So we'll just got to keep an eye on it. Looking towards next week, I'm going to continue to say, just keep an eye on that initial jobless claims until we see an uptick, as we've been saying, until we see an uptick in the unemployment rate. There's really no fire that needs to be addressed in regards to getting rate cuts outside our industry. Our industry would love to see more volume, and we're all dying for more volume. But, from a full U.S. economy standpoint, there's smoke, but there's no fire, as we keep saying.